Let's go get a fundamental view. Siddhartha Khemka, Head of Research, Wealth Management, Motilal Oswal joins us on the show. Hi, Sid. Hope you're feeling rocking this morning. It's a Friday. Markets have been a little bit range-bound, but stocks will do a thing of their own, as would be the case with Wipro. How are you feeling about Wipro's numbers? And, from the tech pack itself, what's the top pick?
Good morning, Nigel. Good day to be on Friday morning. So I think if you look at Wipro, kind of mixed bags on the deals front, they did deliver. Going forward, I think the conversion will be a key monitorable. So the start to FY26 has been weak. The numbers are there for us to see. The IT services revenue has fallen 2% Q on Q on CC terms. However, what is positive that the deal wins have surged 26%, including two mega deals. Near term, I think Q2 will remain sluggish. The guidance is a flat -1 to +1 in terms of revenue growth. In terms of key positives, as I said, strong deal wins. Europe's showing some sign of stability. Margins likely to stay in a range as services EBIT margin stood at 17.3%, down 20 basis points for the quarter. But the expansion is limited going forward due to upfronting of costs of large deal ramps, plus what we heard from the management. Some of these large deals comes at a lower margins. So despite a minor upward revision and some of these positives, we kind of remain neutral on the stock right now. We'll see once Q2 numbers are there, then we'll get to closer to that Q3 quarter where things should start looking up. But as of now, remain neutral on Wipro.
Okay, neutral on Wipro. Siddharth, let's focus on the whole NPA issue with Axis Bank. Are you convinced with what the management has said that this was technical, they are being extra prudent, and it will not slip over into next quarters?
If you look at, I think very difficult to say that the bank has been consistently reporting weak numbers, and irrespective of what the management is saying, I think if you look at the other core business data as well, that is also showing signs of weakness. Loan book growth was muted at about 8% growth. Deposit base shrank about 1% on a sequential basis, raising the CD ratio to 91%. So I think while the management might sound prudent, the overall picture doesn't look that good. Margin continues to remain under pressure, elevated credit costs, higher slippages, definitely because of the internal loan reclassification. We have not heard that from any other bank. Given that RBI has been scrutinizing the entire street, right from the largest to the smallest banks. So it's a bit difficult to digest that such stricter norms only apply to Axis and not to others. So we do see near-term headwinds, and I think it's better to stay away from such numbers until we see some stability. Even the other issue of the management, I think a big name there retiring, and they would need to hire some good credible name to bring the streets confidence. So overall, our rating remains neutral on Axis Bank.
So neutral on Axis Bank. So that's the Motilal view. And the street is really divided on this one. Nuvama has, for instance, downgraded the stock. JM Financial is retaining their buy. So it's a split house on Axis Bank. And we'll see. The market will give its verdict soon enough, guys. So promises to be definitely perhaps the stock of the morning, purely from a news and earnings flow.
All right, let's talk about a couple of good earnings then. Sid, Nuvoco's numbers came out and they looked quite good, actually. I'll tell you what, the problem is they've gone ahead and they've done that Vadraj acquisition. So that's why the street will get a little bit skeptical on. They need to come up with money. Otherwise, the numbers look good. Realizations are up. Profitability is at around 1,000 rupees per ton. And they've been reducing debt as promised. It took a little bit of time, but now they've got their act together. The stock, though, has already run up 10% in the last 30 days or so. Your view on the stock?
Nigel, unfortunately, we don't have coverage on Nuvoco, but overall, I think cement companies have been reporting good numbers, and we are expecting a strong quarter from cement in this quarter.
Yeah. What about Indian hotels? You know, the numbers were expected to be a little bit softish, but Mr. Chatwal is sounding very, very optimistic about the way ahead. And the hotel industry itself is poised for better times. What is your view on the stock and what's the pick of the pack?
Definitely, Nigel. I think while this expectation was not that strong for the hotel sector for this quarter, I think Indian hotels and earlier ITC hotels both came out with strong numbers. The commentary also looks pretty strong. So overall, I think even for the quarter, the numbers were pretty strong for Indian hotels. Revenue grew 32%. We have seen healthy RevPAR growth of 11%, and the company is maintaining a double-digit revenue growth guidance for FY26, favorable demand-supply dynamics. So I think one biggest concern was that with the strong upcycle in the hospitality space, is supply catching up? And what we understand from the management is that supply is still lagging demand, and hence the upcycle in the hotel industry could continue. We continue to like Indian Hotels, which is our preferred pick in the hospitality space. It is our top pick. We have a buy rating and a target price of 900. Giving an upside potential of 19%. The second stock that we like in the space is Lemon Tree in the mid-tier space, consistently expanding into newer territories, mainly targeting your business, religious tourism, tier 2, tier 3 towns. With the development of many new airports now flying to many of these tier 2 towns in India, as well as religious places, have become pretty easy and is driving the tourism growth. So overall, very positive view on the hospitality space. Top pick there being Indian Hotels. We continue to like it for the strong growth, healthy traction in the core business, as well as some of its new business that they are driving.
Any view on Taj GVK? Have you looked at the company?
Unfortunately, not looked at that.
Got
All right. Thanks very much for joining us. As always, Sid.